for a lot of small business owners, it's always same story, different month. Revenue comes in and feels good. We busy and feel good. Get to the end of the month. Cash don't look how it's supposed to look. Profit don't look how it's supposed to look. And of course, if the money ain't looking like it's supposed to look, we not looking how we supposed to look. And a lot of like financial people, accountants, bookkeepers, and such, they always put this in the buckets of spending issues or discipline issues, where on this channel, we put it where it truly belongs. A lot of that stuff is truly a cash flow clarity issue or a visibility issue. It comes from structure, not so much discipline. I'm very slow to say that high performing business owners have discipline issues. I mean, it's true, some cases, but that's not where I'm going to start. I'm going to start with access to information, because in small business, a lot of people aren't actually tracking profit. They're tracking something else. So what that means about profit is it's an assumption. You have assumed profit. You have estimated profit, but your profit literally can't be a guess. It has to be a strategic result of your decision making, because everything we do in businesses that scale is a strategic plan that leads to a strategic result. And guess what? I'm Albert, or Albert the CPA, or Albert C. Hurston Jr., owner, founder, Right Choice Accounting Solutions. I run it with my amazing, gorgeous, spectacular wife, Lauren, and our amazing team. We are your one-stop shop accounting and tax firm. Everything from bookkeeping and tax preparation to fractional CFO and tax strategy. I won't beat a dead horse there, because I really want to get into this video, because we want to stick around the strategy piece of things, right? Like, we got to make sure that we're talking about strategy when we do this. And a lot of times we're not using strategy. We're using what we have access to. So I'm going to just say it. Cash and credit are not profit. I'm going to repeat it. Cash and credit are not profit. You will never go out of business if you only spend profit. So for a third time, cash and credit is not profit, and you will never ever go out of business if you only spend profit. Most business owners do. They check their bank account, they check their available credit on their cash, and that's how they make their spending decisions. Your spending decisions have to be made based on the profit that your business is generating, or you risk running out of money. You can't spend money that you haven't made. I assume everyone watching this channel is a grown person with adults, or you one of my kids' friends. But either way, your financial plan can't be if the car still works. I don't want to keep laughing, but these are all things, and I know I'm in here by myself taper today. They're right out there, so they're kind of glancing in. But I know that's something that's a common thing. Like, your decision making simply can't be as good if the card work. It's cool if the cash is there. It's, as long as we got money in the bank account, we good, because that's not spending strategically. That's hoping and praying, because cash is cash, credit is credit, and profit is profit. And only one of them things, as long as you make sure you don't spend it, as long as you make sure you spend based on it, you will never go out of business. So, because cash, matter of fact, I'm going to spend some time on that. And I want to make sure I'm staying up on these notes on this one. Because when you're actually thinking about cash, right? Let me get these beads of sweat off my forehead, because I love this topic. When you're thinking about cash, right? Cash is misleading, because as you know, if you're a small business owner, you can have $50,000 in your bank account today, and it's already spoken for next week. So you don't truly have 50K available. It looks like you got 50K. And if you're spending based on you having 50K today, that does not account for the payroll coming out, the software coming out, the additional marketing that's coming out. It doesn't account for that stuff. So you can't make decisions based on cash and estimates. You have to make decisions based on the actual data that you have. And credit is credit. I don't think people should keep treating credit like an extension of how much available money they have. Credit has to be a strategic leveraging tool, and you still don't want to spend more than you make. You use credit as your leveraging tool to protect your cash. You don't use credit as your Lord and Savior, Jesus Christ. But there's a true structural problem, right? There's a structural problem with a lot of P&Ls. They're just not set up to be easy decision-making tools. easy tools to go in and actually see what's going on. And I know I cover this all the time, but the P&L setup is so pivotal for small business owners because it's really like the way that you make these decisions easy. It has to be more than a document that you get somebody to categorize and you take it to your tax person at the end of the year. It just has to be so much more than that. And I know, like, I bet if I were to put an estimate on it, over half of small business owners do not even think about their P&L as anything more than a compliance issue, but they don't realize that's the answer to those cash flow issues you're having because you're not listening to the accountants who are trying to scream that from the mountaintops. Sorry for accusing you if you do it. I ain't talking to you. But a clean P&L is the absolute best way to know what's going on in your business. And again, I'm going to keep on harping on this. If you only spend the profit from that P&L, it don't matter if you got $100,000 or $10,000. You will not spend more than you made. And again, like if you look at your bank account right now and you go spend more than you have in it, you're going to start losing some of the stuff that you got. I mean, it's that simple because in a lot of cases, it's a common behavioral problem, right? It's more than business. It's this, I want to see how I want to say it. It's this, I don't know what I should do, so I'm going to make the best guess. And that's like one of the biggest behavioral issues that hold a lot of people back. It's, I don't know what I should do, so I'm literally going to make the best guess on what I should do. And that's literally just a huge, huge issue. Because if you don't know in small business, you got to figure it out or you got to pay somebody to figure it out on your behalf. You cannot guess. In small business, guesses are super duper expensive. And you work way too hard to be assuming and gambling and guessing that this thing that you're spending thousands of dollars on going to actually work out for you. And I know, I don't have my prayer circle, but I know for a fact if Big Chrissy was in here today, I'm almost looking for Chris. I need to call her in here just to tell her, like, we talk about this stuff so much. Y'all know we run day to day in our business. This is what we're talking about with our clients. And this is very, very, very common. And a lot of like the behavioral things, they have us so they see the value in having us. And it's still a little bit of a struggle to break the behavior. It's almost like you have to chase some small business owners down just to teach this lesson to them. Because in their defense, who actually learns this stuff? So if you're watching this, you're in a good place to be learning it, or you're in a good place right now because hopefully you learn this stuff before you have to go and learn the hard way. Anyways, I'm going to give you 4 things that you should do. It's the fix, right? I always say, here's the fix. So, and I'm going to read them all just so I don't overtalk them. Number 1, know your profit before you make any spending decision, not after. So, not just relying on your P&L. You want to understand this stuff. But you're not making you're not basing this decision on your bank accounts. You're not basing it on how much credit you have available. You are basing it on your profit. So that first thing you need to understand is that profit. Number 2, you only spend profit. Even if you're putting it on a credit card, do not spend more money than you've made. That's how you over leverage. That's how you go out of business. Buying stuff you can't afford, no matter what the internet gurus say. Buying stuff that you cannot afford sends more businesses out of business than any other thing that we see. And you know we see it because we literally understand businesses by their numbers. And the only thing that sends people out of business is those numbers. So number 3, keep the books clean. Keep the books structured. Keep the books as one of the key decision-making tools in your business. And number 4, again, every spending decision starts with a review of those numbers. Know your profit. Number 1 and number 4 is the same thing. And that's truly it. And I think I've said enough here. I'm going to take it to the bridge because it's just as simple as that, right? You check your profit. You make sure that you're making decisions based on that profit, and your bank account is going to do exactly what it's supposed to do. Go up. Like, comment, and subscribe. I'll see you in the next one.